It's raining IPOs in the markets. BSE and NSE have emerged as top players in the world in terms of number of IPOs and in terms of issue proceeds in a year of 2023 so far. As per EY's recent report, main markets witnessed 6 IPOs in April to June period and 4 IPOs in the Jan to March period. In SME markets too, there were 32 IPOs in Q2 2023 alone. But do you know what is an IPO or SME IPO and how should you invest in them? Hello and welcome, I am Pallavi Sharma and you are watching Money Magic with ET Now. Let's begin. Starting with what is an IPO. The first time a stock of a private company is sold to the public, then it is issued as an IPO or initial public offering. With this, a company raises equity capital from public investors. Before the IPO, the company is considered private with early investors who are mostly friends or professional investors like venture capitalists or angel investors. When a company goes public, the previously owned private share ownership converts into public ownership. Now, the price of the IPO is set by the underwriters after discussing valuations and more other factors. Now, the IPO opens for subscription after that, and an IPO can be fresh issue or offer for sale or both. Fresh issue is the fresh shares that the company is issuing, and offer for sale are those shares that are being sold by the existing investors or shareholders of the company. Now, what is an SME IPO? When a small or medium-sized company offers its stock to the public, it is known as an SME IPO. Now, how is it different from a normal IPO, if you may ask? First is that SEBI validates the IPO for a normal company, but the exchanges validate the IPO in case of SMEs. For SME IPO, the company must have a minimum post-paid capital of 1 crore rupees, but for regular one, it is to be minimum of 10 crore rupees. The minimum number of allottees in a regular IPO must be 1000, while in SME IPO, it can be 500. The size of application also differs. It is rupees 1 lakh for SME and rupees 10,000 to 15,000 for a regular IPO. Now, with so many IPOs, how to choose where to invest? Let me give you some tips. First, do deep research. Getting information about a company that is set to go public can be a little tough. Many analysts don't cover these companies, but most companies try to fully disclose all their information in their prospectus. Also, search online about the company's past releases, the financial health and overall industry strength. Second is to pick a company with strong underwriter or broker. Since the price and the number of shares are all decided by the underwriter, quality brokerages are to be picked. They associate more with quality. There is an extra caution while picking smaller brokerages because they may be willing to underwrite any company. Say Goldman Sachs. It can afford to be a picker about the company it underwrites. Third is to always read the prospectus. While you should not put your full faith into it because it's framed by the company itself, but the prospectus also has risks and opportunities along with proposed uses of the proceeds. For example, if the money is being deployed just to repay loans or buy equity from other founders, then you may miss the IPO. You don't need it. Fourth is that you need to be a little cautious. There is a lot of uncertainty in the IPO market. If your broker is strongly pitching a certain offering, it is possible that they have graciously passed on the underwriter's attempt to sell the stock to them and you might be getting the bottom feed. So be cautious about it and also do your research. Last is the lockup period, which prohibits investors from selling the shares of a company before a specified period. You should always consider to wait for this period to end. So after the lockup period, if investors are selling massively, then it means that something is wrong. So this is all about it, and now make sure that you invest smartly, and to do that, don't forget to subscribe to ET Now's YouTube channel for more such informative videos.
If you like this video, then like, share and subscribe to ET Now.